All right, welcome to tonight's application session for the investor trading strategies. We are going to focus on doing rather than talking about theory. There are no PowerPoint presentations. It's just the tools and us looking at charts. If you have any questions, you can type them into the question box. I'll pause from time to time to answer questions, but I won't, answer your question immediately when you ask. So if you ask me a question about a specific stock that I'm showing on the screen at the time, make sure you type in the symbol and something so that I can go back to it, because I may not go back to it for 10 minutes later or something like that. Okay? All right, so what I want to start with is just a little overview of the market scan tool. That's what we're on now. And we have different categories of filters. We have the general filters. We have the filters relating to the stock scores indicators, and then price, volume, and momentum filters. And although most of the time, most of my students will use preset scans, those are the ones I've saved for you, it is possible to build your own scan. You could say, show me all the stocks on the Toronto Stock Exchange that have a sentiment score greater than 60, made an abnormal day to the upside today, and traded abnormal volume. And in the interest of ruling out things that aren't very liquid, say it trades at least 100 times, and just click on Run Market Scan, and it will give you the stocks that did that. As I said, most of you, most of the time, will use your own presets, either the ones I've saved for you or ones that you save for yourself. So it's possible to take any of those filters, create a scan, save it as a certain name, and go back to it repeatedly over time. What we're going to do tonight is focus on the investor scans. We are going to do the new strategy, which is called action candle breaks. And if we have time, we'll do abnormal breaks, which is a similar strategy. And if we have time, we'll do some other stuff as well. But we're going to go through the charts quite a bit more slowly today than we will on Thursday or Friday, because today it's all about teaching. Now, one little thing I want to direct you to, I'm just going to pull up a chart here, is I have a little app on my computer called Zoomit. Oops. And Zoomit allows me to zoom in on charts. That's not what I want to do. Hold on. Trying to get the keystrokes right here. I want to draw. Draw is Control D. That's what I did. Let me try this again. Control D. Well, I can draw, but it's zooming. That's a bit of a pain. It's not working right. Let me just try changing the keystroke. So anyway, Zoomit is a free program that you can download from, I don't know why it's doing that. It's a free program that you can download from Microsoft. So if you go to the Microsoft.com website, actually don't even do that. Just Google. Just do this. Go Zoomit download, and you'll go to the Microsoft website. You can download this program. It's free. And what's nice about it is it allows you to draw lines on your chart as it's going to give me a problem tonight because it's zooming instead of letting me draw. The joys of computers. Oh well, I can use this other tool. No big deal. So anyway, in the future, this week, I will draw lines on these charts. So what Zoomit allows you to do is just draw a line on whatever you're looking at, and it will appear on your screen, but you can erase it very quickly just by hitting the escape button. So as we go through charts, I'm going to try to highlight patterns, and assuming I can figure out how to get my drawing tool to work. Trying to do another one right now. Well, it's not working very well. well, I'll make the best of it tonight. I don't know why it's happening. What's supposed to happen is if I hit a keystroke and I'm hitting Control D, it's supposed to just draw a line. And what it's doing is it's zooming in on the chart and then giving my drawing tool, but I don't want to zoom in. So for some reason it's messing up, but anyway, it doesn't matter a whole lot. Okay, so what we're going to do tonight is preset market scans. And we're going to go through the charts pretty slowly tonight. And as the week progresses, I'm going to make you pick out the good charts and not rely so much on me reading the charts. But tonight we're going to go slow and I'll show you what I look for. All right, so we're going to run the investor scans. We're going to do the action candle breaks. Now, just a quick note, if you go into the trader training area, education center, and go down to the investor area, you will see the action candle, stock scores action breaks strategy. There is a write-up which explains the rules. Okay, so what we're looking for is a message candle, or an action candle, sorry, breaking the downward trend line. What is an action candle? An action candle is one that has a abnormal price move to the upside with abnormal volume. Okay, you can see it here. Makes a break to the upside with very strong volume, and it's breaking the 80-day trend line. So what is the 80-day trend line? Well, to do that, you find the highest point in the last 4 months. Okay, there's 20 trading days per month. So the highest point will be the 80-day high. Is everyone hearing me okay? Someone's saying they can't hear me, but I think others are hearing me. Yeah. So let me just let this person know. Okay. One of the joys of doing live presentations is one person has an issue. Sometimes I think everyone does, and that's not the case here. So just bear with me for a moment. I just want to let them know what to do. Okay. So this strategy, pick the 80-day high, and then just draw a line that hits the next highest point to create a trend line. And that's what we're looking for. And it really is that simple and yet that complicated. Let me do something else. I'm going to just grab, I've got another tool here that I can draw with. This is called Snagit. And Snagit is a nice tool if you want to draw on charts repeatedly and save them. So I can take my line drawing tool and I can just start my line and see how I can move my line around. All right, so if I start at that point and I let it fall using the blue arrow as my action or my breakout candle, wherever the line can't go down anymore because it hits a peak, that's where you want to draw your line. So if I did it here, I would start the line here and I would let it fall until it hits that point. And there's my resistance line. Okay, if I wanted to draw an upward trend line, I would start at the low and I would just let it go up until it hits a point, and it's going to hit this one first, right? And there is my upward trend line. So that's how we draw lines. It's just pick your, in this case, the 80-day high, which is the 4-month high. So count back 4 months, 1, 2, 3, 4. And the highest point in the 4 months is this one. Start your line there and just let it fall until it hits another point, which is this one right here. And you have your trend line. So that's what this strategy is all about, is looking for an action candle breaking a downward trend line. So here's how it looks in TradeStation. And if you're an investor student, you're maybe not using TradeStation. It's more for the active trader people. But the concept is the same. Now, I've actually programmed it into TradeStation so it draws those lines automatically. But you don't need a computer to draw the line for you. It's not that hard. Just start at the highest point of the previous 4 months. So if you see an action candle, here's our action candle. Go back 4 months, pick the highest point, and let the line fall at the lowest point where it hits before the action candle. And that's where we can see General Motors on this particular day, late in August, breaking the downward trend line, and up it went. So that's what the strategy is all about. I encourage you to go read this. as well as watch the video. So the video was uploaded on Friday. It didn't work because I put the wrong link up, but now it's fixed. Somebody let me know that I screwed it up, and it's now working. All right, so let's run that scan. We'll do it on the Canadian market first. So I go down. Actually, we're going to do it. The action candle doesn't differentiate between the US and Canada. So we just select action candle breaks, run the market scan. I may create a separate version for the US and Canada down the road, but for now I haven't. And we're going to do this in slideshow view. Now our job is to look at all these charts and ask ourselves, is it breaking the downward trend line based on the 80-day trend line? So find the 80-day high. And is it an action candle? Now, if it comes up in the scan, it's an action candle. You can see visually that this price action is abnormal and this volume is abnormal. And if I was to pick the 4-month high, I'd go back 1, 2, 3, 4. So my highest point is this point right here. And if I draw a line going across there, is it above the line today? No. I'm going to try this one more time to see if this is going to work. It's not. That's really annoying, isn't it? Oh, well, I will use another tool, my Snagit tool. You can go to snagit.com and download Snagit. The problem with Snagit is you got to pay $50 for it. So we're going to just do that. I really recommend using Zoomit. Although you can't save charts, I don't think, with Zoomit, but it is a lot easier to use normally. It's proving me wrong tonight, but all right, so I start with my 80-day high. Here's my line, and just let it fall until it hits another point, another peak. There's my trend line, and I am below the trend line right now. So even though it had a strong day to the upside with strong volume, it is not breaking the trend line. So the issue is when you're using stock scores is it doesn't know, stock scores doesn't have an indicator to measure the trend line. I have programmed that for TradeStation. If you use TradeStation, it'll do it for you automatically, but stock scores won't. So we have to do the work in stock scores. All right, so let's start with this one. 4-month high, 1 month, 2 month, 3 month, 4 month. There's my 4-month high. Draw a line from there across, and I'm way below it. So this is a no. Go to the next one. All right, this looks a little different. So I'm going to grab this image using Snagit again. And I'd like this to be a little bit more zoomed. So there we go. All right, where's the 4-month high? 1 month, 2 month, 3 month, 4 month. So the 4-month high is here. And if I let my line fall until it hits the next peak, it's going to be like that. Everyone see that? So today we are breaking the trend line, 80-day trend line. We have abnormal volume. We have abnormal price. So at this point, looks great. A couple other things to think about. One of the things I teach in the foundation material is the importance of looking for a or the benefit of seeing rising bottoms. We talk about optimism on charts. So if I draw a line across the bottoms, I can see that we have some rising bottoms, which means there is some optimism. Okay, so that's also good. Now, when I see a good chart like this one, what I'll then do is go and look inside the chart. I want to look at a shorter term time frame. So I'm going to go to 5-day because I want to see how it closed today. What I like is that it closed at its high of the day, or very close. It was a penny off maybe. What I don't like is that it wasn't stable into the close. See how this was sideways into the close? Or that wasn't the close, was it? How it was sideways at that point of the day. I like that better. At the end of the day, it was kind of rallying into the close. It wasn't going crazy. It wasn't like a mad rush to own it, so that's not too bad. But that's like a half a knock against it because it was not stable into the close. It was trending higher. Then I'll look at the 3-year. And I can see that it broke the downward trend line a couple months ago, built that rising bottom, breaking from the rising bottom. So I like this one. I'd give this an 8 out of 10. Stock scores, 89, 64. Those are good. For this particular strategy, the stock scores actually don't really matter. But still, it is good to take a look at that indicator because it just is an added bonus. The fact that the stock scores have come up after being down for a long time is a sign that the buyers are getting enthusiastic about it. All right, so that's our first good one. We've gone through 3 stocks out of 16, and that one looks pretty positive. I'd give that, like I said, an 8 out of 10. And it's funny, I did some scans during the day today. I missed this one for some reason. Okay, is this one breaking the downward trend line? You don't need to answer. I just want you to think about that. And I'm going to give you a moment to actually look at the chart and go through that 4-month high, draw the trend line process. So what's your 4-month high? Well, we say this is 1 month, 2 month, 3 months, 4 months. If I started the high of the last 4 months and I was to draw a line across those tops, I'd be well below the line. What that tells me is that today's strength wasn't so much a sign of buyer optimism, but rather a reaction to this stock being oversold. Okay, let's go to the next one. Okay, so as you practice this, you're going to be able to just look at these things and say yes or no or maybe. And when I look at this one quickly, I say maybe, because it's hard to tell if it's breaking the 4-month downward trend line. So let's grab the image and draw some lines on it. I wish it wasn't so zoomed out, so I'll put that in a little better. Okay, so 1 month, 2 month, 3 month, 4 month. So I'm going to start with my highest inflection point, which is there. And I'm going to let my line fall across the other points. And can you see that it was just below it? It actually tried during the day to get above. You can see it hit 85 cents there today, but it didn't close above that trend line. And that tells me that the buyers didn't have the power to overcome the pessimism. So this one doesn't quite cut it. I think it's worth watching because it did have abnormal volume and it did have abnormal price action, so something's going on, but maybe it's just going to pull back from here and not make it above that trend line. Let's keep looking. Okay, so I can see that this probably isn't going to be above its trend line. My 4-month high is here. If I cut across these tops, it's not going to get through that line. Okay, so the next one, I'm going to give you a moment to think about it. And you don't have to draw the line. Just take out a piece of paper, hold it up to your screen, your computer screen, start at the 4-month high, and just bring your paper down until it touches the 4-month high and the next high down that the paper touches. Go through that little exercise. Hopefully everyone's got some paper or some kind of a straight edge near them. And see if that is above the trend line. And I'll draw the line for you in a moment. Like I said, I'm going through this really slow tonight. By the end of the week, I want you to be able to see these quickly. So it takes practice. Okay, so let's start here. What is the 4-month high? 1 month, 2 month, 3 month, 4 months. So my high point is here. And I'm going to take my line, I'm going to let it fall until it hits these other points. And I can see that I am still below the trend line. One of the things that you've probably heard me talk about before is how price will run away from the trend line and then come back to it. And this is a good example of that. It ran away a little too quickly to the downside, and now it's popping up to hit the trend line, but it hasn't broken it yet, which means it probably will fall lower in the near term. Doesn't mean it will fall lower, it means it will probably fall lower. We're just about trading probability. Okay, next one. Okay, so take out your straight edge and determine if this stock is breaking its downward trend line today. Got it figured out? Okay, so I'm going to start. Well, first of all, I got to capture the image. And I'm going to zoom in. This is my highest point. Take my line. Where does it land? Kind of lands like that. So I'm just through it. I wouldn't say I am decisively through it. I wouldn't say this volume is really strong. It's pretty good. It's the strongest day in 2 months. So this one is a 7 out of 10. It's not a clear, obvious signal that the buyers were really excited today. I'd keep an eye on this one, but I'd like to see some further confirmation in the next day or two that the buyers really want to push this stock up. Okay, so is this one above its trend line? Now I can just look at that with some practice. I know that it is not going to be above the trend line because the trend line is going to start here. It's going to hit this point, and I draw a line across those points. I'm well below it. So no go. Go to the next one. Okay, this one's more borderline, so get out your straight edge and figure out if it's above the 80-day trend line. Okay, hopefully that was enough time. Excuse me. So 4-month high, 1 month, 2 month, 3 month, 4 month. So I will start here. I'm going to cut across that point right there. And I see that I haven't quite done it yet. Now, what if it was a 40-day trend line? Well, 40 days is 2 months, 1 month, 2 month. Then I would start here and I would, whoops, move that out of the way. 4-month trend line. Sorry, I'm having a little trouble drawing lines here. That would look more like that. So it's breaking the 40-day trend line, but it's not breaking the 80-day trend line. So that's pretty good, but I think it's probably not quite a high enough probability. What if we wanted to do the, I don't know, the 160-day trend line? Go back 8 months. 1 month, 2, 3, 4, 5, 6, 7, 8. So let's just start at this line and draw across those tops. So call it the 160-day trend line. It's not through that one either. So I don't think it's good enough. So what you should see from this process is that I look at a lot of charts and most aren't good enough. So far we found 1 out of 11 that meets our criteria. All right, what do you think about this one? So we're going to start our trend line at the 4-month high. So we'll start it here, cut across that, and you can see that we are above it today. Good. Volume was pretty strong, not exceptionally strong, but a little bit skewed by the fact that we had this big volume day back there. Today's volume has actually been higher than most days going back a couple of months. What I don't like is all of the volatility here. So again, from your foundation lessons, you should remember that volatility is the sign of uncertainty. And so the fact that this stock is breaking from quite a lot of volatility tells me that the signal is less reliable. So I would give this one a 7. I like that it's breaking the trend line. I don't like all of the volatility. And so it's not quite good enough for me to say, hooray, this is awesome. Okay, this one is above its trend line because we'd start here and our line would cut across there. So that's good. One of the negatives is notice that today it was quite strong at some point in the day, but it failed to hold that strength. That's why you have that long candle wick. Call that the wick. See how there's that long line there? Now let me show you inside today what that actually is. So if I go to a 5-day chart, here's today. So notice in the morning it didn't do much, and then it had this big spike, went up to 560 at probably about 1 o'clock. And then after that, it was probably a 1 hour spike, it fell back again. So what that shows me is that when there was strength, the sellers were pretty eager to sell into that strength. That's not a good sign. If the sellers are like, hey, we finally get to get out of this piece of junk stock, and they sell into it, that's not a great sign. It means that the buyers weren't that strong, and the sellers had some strength still. So I don't love that one. Let's go to the next one. Okay, I can see this one is breaking the downward trend line. The volume doesn't really jump out. Mathematically, it's probably abnormal, but it doesn't look awesome, right? Other issue is, see how chunky the chart is? See how it's got lots of days when it's just got little lines. And this type of chart, when you see a chart that's not very smooth like this one, it tells me that the stock isn't very liquid. And that makes the message of the market less reliable. So when you see a chart like this, be a little bit cautious with it, because I'll bet you this stock didn't trade even 1,000 times today. I don't know for sure, but just looking at the way the chart's pattern is, I would say it traded probably a few hundred times. Let's go to the next one. Okay, this one closed below its open. Not a good thing. We want for this strategy to be closing above its open. I can also see that it would still be below the trend line because I'd start here and I draw a line across here and it would be below it. So let's go to the next one. Okay, this is the same stock that we looked at before, just the Canadian listing. It's a lot of volatility into this break that's, yes, above the trend line, but not really well above the trend line. Be fussy. Is this one above the trend line? You look at that and you should be able to instantly see that the answer is no. You don't even need to take out your straight edge. You can see that this one's stuck inside of a trading range. Yeah, it had an up day, and yes, it had good volume, but it doesn't have the other things we want to see. All right. So, any questions on that before I move on? Pretty simple concept. Now, when you do the action break strategy with TradeStation, the trend doesn't have to be a downtrend. It could be a sideways trend. In StockScore, just the way the filtering tools work, I had to actually set it up so that it only looks for a break of a downward trend line. But that doesn't mean that downward trend lines are the only breaks we want to see. We also want to see abnormal breaks of sideways trends. And so in TradeStation, you kind of only have to do the one process because TradeStation doesn't differentiate between resistance that is a downward trend line or resistance that is horizontal. But StockScores does, and it's kind of hard to explain why, but it's just the way the filters work. So the other thing you can do in StockScores to find what is in spirit kind of the same thing is to do the abnormal break scan. This also looks for action candles, but it doesn't require that the stock be in a downward trend. So what we're going to do next is the abnormal break scan, and we'll do this separately for Canada and the US. So I'm going to run the Canadian one. And there were 17 stocks. But from a visual standpoint, we're going to do the same thing. We're going to ask ourselves, is this stock breaking its trend line? Excuse me. And is it doing so with strong volume and all that kind of thing? Now this one, the first chart that we have here, and we'll use the gallery viewer now, it's pretty easy for me to see that this stock isn't very liquid normally, right? Now it actually traded 430 times, which for a Canadian stock is pretty good. It's got good volume, good price action, and if I was to draw a trend line, I could see that it was above it. It actually broke above it on Friday, but it didn't close very strong on Friday, so today's better. Now this is a really cheap stock, 15 cents, so quite a bit more speculative. Let's take a look at the 3-year chart. And I can see that this thing has been a dog for a couple of years, and it just finally came alive. Let's take a look at the what happened sort of today. And you can see that it started to come alive on Friday, moved up well today. Curious to see how stable it was. It was pretty good. I would give this a solid 7, maybe even a 7.5 out of 10. What I don't like is the lack of liquidity historically. What I do like is the abnormal activity today. It closed pretty stable near the high of the day. So it's got some good things going. Definitely a stock to keep an eye on tomorrow. All right. So this one got the abnormal action, but when did it break through resistance? Well, if I start my 4-month trend line here and cut across, I can see that it broke that trend about 3 weeks ago at 10 cents. So this is another cheap stock. So that to me was the time to buy it when it broke out to 10 cents here. To buy it now, kind of coming a little late to the party. And if you own this, I would definitely hold it, but I don't think I'd buy it here. Okay, what about this one? Well, if I take my 4-month high, 1 month, 2 month, 3 month, 4 month, and draw a line, I can see that I'm breaking that with very good volume today. Look at how abnormal that volume is today relative to the past. So I like that. Let's take a look at a longer term time frame, see if there's any issues. What I want to look for when I look at the longer term time frame is old highs, because those will be resistance. And I can see that I have old highs in the 30 to 34 cent range. Let me blow this up. That was back from the start of this year. So that is a bit of a worry because the stock may get stuck there. I still think this is good. I don't think it's great because of those old resistance levels. But obviously something's coming alive again today for some reason. I'd give this a 7 out of 10. Definitely keep an eye on it tomorrow. One of the questions you should ask yourself when you're looking at charts, especially with this strategy, is when did the party start? When should I have bought it? Am I chasing the stock or am I getting in on the ground floor? When I look at this one, my thought is I should have bought this stock in October. That's when it came alive. That was the time to take the risk. Now you're getting the reward. That's how I would look at that one. Because today's action is not really the start of the trend. It's the second or third step in the trend. That's another little rule to keep in mind. Buy when the trend starts. This trend started on Friday. All of these cobalt stocks, you can see this company here is called Cruise Cobalt. There was a bunch of cobalt stocks that all made breakouts on Friday. Breaks of trend lines, breaks of horizontal resistance. And so if you bought it on Friday, when it made the break, you're up 18% today. But to buy it today, you're kind of 1 day late to the party. Not terrible, but not ideal. I think the stock could go to 70 cents. And so if you bought it, that to me is the next level of resistance. Doesn't mean it'll get to 70 cents, and don't count on that happening. But that's really based on the chart pattern where it should go and then get stuck. All right, when did the party start on this one? 3 days ago, right? So today, you're kind of buying the reward instead of taking the risk. It's up 28% since this abnormal day 3 days ago. Very simple principles that we apply over and over again. But the thing is, in order to do it well, you have to understand those principles really well. Support, resistance, price volatility, getting in at the ground floor, these concepts. All right, here was the day it broke out through resistance at 20 cents. Now it's at 37 cents. You know, here you had 1 month, 2 month, 3 month, 4 month, almost 5 months of sideways trading. And today it came, or not today, it came alive, whatever that is, 5 days ago. It was 20 cents taking the risk. It wasn't perfect there because it didn't close near its high. Now it's at 37. It's a pretty good return. It's up 43% today, but up even more from that 20-cent entry signal. Here's another one of those cobalt stocks. Made the break. Look at this. Nobody cared about this company. Boring. Didn't trade a lot of volume. No volatility. And then it came alive there. So what we're trying to do with both of these scans that we've done tonight is find these stocks when they're coming alive. This is a quiet room, and this is someone yelling in a quiet room. But you got to catch them at the ground floor, not on the second or third floor. Good hold, wouldn't buy it here. Okay, are we getting in on this one at the ground floor? No. You know, you could argue that it broke out here, but the real first abnormal day was this one at 25 cents. In 2 days, it's doubled in price. Good liquidity too, traded 1,339 times today. Okay, when did this break resistance? Well, I'll help you with this one. Let's just take out our line drawing tool. Start with what's the 4-month high. So look at that. 1 month, 2 month, 3 month, 4 months. So let's go here. Let the line fall. It hits that point. And there you can see the breakout right there with good volume. 65, no, probably about 70 cents. Now we're at $1, whatever, $1.05. It's a 50% gain in 4 days. Keep in mind that you don't have to know anything about what this company does. The charts tell you what to do. But you got to do the work every night. We're going to do it all night, all week together. Okay, this one, too late. This one looks interesting. Let's blow this up. And let's actually draw some lines on this chart. So if you read my daily newsletter, you'll know that I featured this stock today. Here's why. Start with my 80-day high, let it fall, and I can see my break of trend today, and I can see strong volume today. So the daily chart looks pretty good. Now let's take a look inside different time frames. 10-day chart, ramped up a little bit into the close. I'm probably a little bit to blame for that because I did feature this stock late in the day, and I'm pretty sure some of my Trade Scores subscribers were buying it into the close. Not really an illiquid stock, but still only traded 577 times. So, you know, you get a few people wanting to buy the stock in the last half an hour, can create some action. But that's pretty good. Let's take a look at the 3-year. And the 3-year, I can see it ramped up. It broke the downward trend line, and now it's trying to break up from a rising bottom. Probably get stuck at $1.50 short term, but I think this has got pretty good potential looking out farther than that. NEPT, not getting in on the ground floor. It first came alive 2 weeks ago. Now you're buying the reward instead of taking the risk. APH, not getting in on the ground floor. It's not breaking from low volatility. It did that back in September. And then a little cup and handle pattern here at the start of November. But you don't want to buy this. This is the public buying. You want to be part of the smart money. buying the first break from a good chart pattern. I don't think this stands out relative to the trading range before, so I don't like that. Sierra Wireless, we talked about that one already a few times. This one below the trend line. Let's go to our next. I think that's it. Okay, I'll pause again for questions. Guys have no questions. All right, let's keep rolling along. So let's do that same strategy, but on the US market. So it's the abnormal breaks. Go to market scan. Abnormal breaks. US. Run the scan. 32. Okay, let's do this in the large view again. So I can click on this slideshow icon right here to make it nice big versions of the chart. And just cycle through the charts with my arrows. I don't have to hit the mouse anymore. I can just hit the left and right arrow. Okay, too late to the party, right? Party started a week ago. This one is interesting. Let's blow this chart up and do some markup on it. All right, so let's start with the 4-month high. 1 month, 2 month, 3 month, 4 month. Start my line here, and it falls to there. So it's definitely breaking the trend. Very good volume and good price action. One problem I see right away is the fact that it's closing well off of its high. It hit 65 cents today and closed at 52. So let's go back to the Stock Scores website and mess around with our time frame links. Let's just look at the 5-day and see what happened during the day today. It was going kind of crazy, and then there's some profit taking into the close. That's not a great sign. That means there was people selling into the close stronger than the buyers. It's not terrible, but it's not a good thing. So it knocks it down a mark. Let's take a look at the 3-year and see where there is longer term resistance or support. And there really isn't a major price peak on this 3-year chart. Let's go 5-year. So 5-year, I can see that maybe it's going to get resistance at $1.80. It's pretty good upside from here. So I would give this one a 7 out of 10. If it had closed more stable near the high of the day, I would have given it an 8 out of 10. 7 out of 10s are good. They usually work. I shouldn't say they usually work. The expected value is positive. You know, we expect them to make money. Maybe not everyone will, but we expect them to do well. But they're just a bit more of a long shot. Right? Long shot's not even the word. They're lower probability. Okay? Let's go to the next one. We looked at this already. This was the one that we found on the Canadian market. Or do we find this one? Anyway, this is good, right? This is the one that we found first. I gave this an 8 out of 10. OWCP, like that one. Now let's use this. We'll come back to OWCP. I want to do risk reward on this one. We'll come back to it in a bit. No, well below its open. Bus left the station. Party's over, or the party's well on. Close below its open. That's why it's a red candle. Close below its open. Really just getting stuck at resistance. Not bad. Breaking from a rising bottom. Pretty good volume. Price action good, not great. Closed off of its highs a little bit. Let's take a look at the 5-day. That was pretty stable into the close. So someone asked me about this during my webinar today. I'd give that a 7, borderline better. Just look at this 6-month again. See how it's a little bit choppy, or not choppy, but volatile here? It's not quiet. It went up, it pulled back. It's been going up for basically a week and a half. So that's a bit of a negative. So I'd give it a 7. Too late. Pretty volatile into the breakout. Not terrible. We take a look at the 3-year. That's interesting. Breaking breaking to new highs on the 3-year. Took a look at the 5-day. Pretty good. This looks solid. I wouldn't say it's outstanding because it started moving on Friday. I'd give this a 7 out of 10. Had a hard time holding its highs of the day. If we go into the 5-day chart, see how it ramped up and then faded into the close? So that's not a great sign. 7 out of 10 on that one. Don't love this pattern. It's going to get some resistance there. It's not really quiet here. Really, this party started back here. It went up, it's pulled back. It does look like a continuation pattern that it will continue higher, but I'd give that a 6.5 or 7 out of 10. Way below its open, but this is a great example because this stock I picked in my, let me zoom in on this a bit more. So this was one of my featured stocks in the Trade Scores newsletter 33 days ago. Whoops, I don't want that. I want a 3-month chart. Here we go. So I think it was on this day right here that I picked it. You can see the strong volume, strong price action. The scale is really skewed because the stock went up so much today. But that was the day I bought it. And notice that it never went below support, because we would put support right at the low there before the entry signal. And again, it really is skewed because of the big jump today. And then today, actually started on Friday. It started to move on Friday. Today made a huge jump. I sold it at, I think 290 today. Let me just look at the chart. Maybe 269. I think it was, yes, it was at 269 to lock in that gain. Now, is that the right thing to do? I don't know. It was a 25 RR trade and up 330% from when I featured it 33 days ago. Now, would I buy it today? No. Close below its open. I was a seller of that today. This one way off of its highs, so that's not a good thing. See how it went up and then went right back down again? That means someone basically read the news and said, sounds like garbage. This one also well off of its highs. I day traded this one today, and it was up, at one point it was up about 2 RR, but it faded into the close. I think it finished a +1 or something like that. All right, so this one I think deserves a little bit more attention, so let's take out our line drawing tools. And we're going to start with the 4-month high, 1, 2, 3, 4. So we'll start around here, draw a line, and see how it's still just below that. I think we looked at this one already in one of our other scans. That's the thing, when you do multiple scans, sometimes you'll look at the same stocks more than once. This one well off of its highs. Party started some time ago. This is a buyout. Company's being bought by somebody else. This is not bad. It's breaking through this resistance level. It's pretty volatile over the last number of months. Let's take a look at the 3-year here. See the problem? It's going to get stuck at this resistance level. Between $6.50 and $7, there's going to be a pretty good supply of stock. And so that limits its upside. And really, if I look at that 3-year chart, the party started, back in the spring. So I don't love that one. This has got some price action. The volume doesn't look all that great, does it? Let's take a look inside the chart. Go to the 5-day. It had the volume come in late. That's why it didn't show so much. So that looks okay. Let's take a look at the 3-year. So it's breaking a flag. It went up, drifted back, maybe 50% retracement, is now starting to go up again. I'd give this a 7 out of 10. It's got some hair on it, but looks pretty good. This one, when did the party start? August? Maybe you could even say July. You don't want to come to the party when everyone's been there for 4 months. Too late. That to me looks like a buyout. Anytime you see a really big price gap and then no volatility in price, that tells you that there's probably some transaction going on to buy the company or merge it or something like that. This one I think is still struggling with resistance. It's not really through this peak here. This doesn't stand out relative to the volatility before it, so not quite what I want to see. Not a good break from low volatility there. Looked at that 5 times already. Barracuda Network's another one being bought. So don't really see any reason to take that. Again, anytime you see a big price gap with low volatility after the gap, go check the news. You'll see it's probably being bought by someone. So on this time frame, I don't love it because this doesn't really, it's been drifting higher for over a month. But let me take a look at the 3-year on this. Sometimes something could have a good potential longer term, and I don't love it there because on the 3-year, I can see this old inflection point high is going to cause resistance at $59. Party started 2 weeks ago. Remember, draw your trend line, start here, cut across these. Trend line was broken right there at 54 and change. Now it's at 68. You don't want to pay that much more. 2 more to go. This is an ascending triangle pattern. Looks pretty good. It's been going up for a while, so it feels like I might be coming a little late. Yeah, and then it's going to get resistance at 240. So not quite good enough. One more. GBTC. Nope, not a break from low volatility. All right, any questions? Oh yeah, one of those stocks Meredith bought time. Yeah, you're right. So next question. So of the stocks you showed that you were late for, did you happen to see any of these before they took off? Yeah, most of them. I mean, I do these scans every day. But a lot of them were 7s out of 10, and I don't always take 7s. Some of them were stocks that I, put in the trade scores alerts or bought myself. Like that DPW up 300 and something percent today. I bought that a month ago. Next question, will this webinar be put on your site for review? It won't be put on the site, but I will email you the link for it. So I did record tonight's presentation, and I will compile the video after we're done, and I'll email you out a link so that you can watch it later as well. All of the sessions this week will be recorded. So, a lot of the things that we did tonight, we're going to practice all week. So, if you have questions you think of later or when you're watching the video, write them down so that tomorrow you can ask me them, and I'll be happy to go through those. Do I run multiple strategies each day? Yes, I do. So every day I do the abnormal breaks during the day. Of course, I day trade as well, and I swing trade, but I do the action breaks and the abnormal breaks every day. On Fridays, I do the Stock Scores Simple Weekly as well. I'll do the ETF scans, which isn't on the site yet, but it will be very soon. So all of those things, it's just part of your process. And when you start out doing it, you can easily spend an hour doing it when you're just learning. But with practice, you'll, go through those in 5 minutes, because it really becomes kind of methodical and simple after a while. Next question. Having had seen V.CSK on first day breakout after close, do you just jump in the morning or watch and see? So let me just bring up that stock specifically, just so we know what we're talking about. V.CSK. Okay, so it broke higher, right? Nice pattern, good volume coming in, has everything we want. The market was boring and it became alive at 23 cents. So the question is, do you jump into it the next morning or do you wait and see? Generally speaking, I just jump into it unless it really shows some bad weakness on the open. If this stock closed at 23 and opened the next day at 20, I'd be a little bit cautious. But it opened the next day at 24 and it went down to 22 during the day, but it's not uncommon for stocks to pull back a little bit after the break. So I usually just buy them. And you can run these scans, in the last half an hour of the trading day and catch them before they close. So, for example, MGTI broke its downward trend line on Friday, opened this morning at 240 and change, and went all the way up to 320 in the opening hour. So sometimes you're better off if you can catch them before the close. This one unfortunately fizzled out after it started. It was looking pretty good during the day. Okay, other questions? If I was to try and get into V.NXO tomorrow, would you recommend going in at market? I have to be careful. I hate telling people what to do with their money. I'm not legally allowed to. So you have to make those calls for yourself. What I will say is the less liquid a stock is, the more a market order could hurt you. What I typically do is I pull up the stock, I look at the bid, I look at the ask. If there's a really wide spread, then I'll maybe be a little more patient and see if stock will pull back into me. But as a general thing, I buy the stock. If it gives me a buy signal, I buy it. And I don't get too picky about, paying 3 cents extra a share because I'm doing a market order. But you should always check what's for sale. And especially if you're trading size, like if you're going in there and buying, 5,000 shares of $1.50 stock, it's probably not a big deal. If you're going in and buying $100,000 of $1.50 stock, then you got to think a little bit more about liquidity and can the market absorb your order? So, there's a bit of an art to trading, and you have to use some common sense when you look at the thing and say, well, if I want to buy 10,000 shares and you look at what's available for sale from the broker system, it'll show you that. If buying 10,000 shares means you're going to rip out a bunch of offers and open the stock up 10 cents from where it closed yesterday, yeah, maybe not a great idea. You might want to sit in the weeds a little bit and buy, pieces at a time, that sort of thing. Next question, will you do a sector and ETF scan sometime? I do that every weekend, and that's the basis for my Market Minutes video. Hopefully everyone's watching the Market Minutes videos. They're on YouTube, on my Stock Scores channel on YouTube. So go to go to YouTube. So let's do this. Because these videos, you should watch them every week. They're free. Why wouldn't you? So go to here and just go search for Stock Scores. And then you see my big head. Click on that. And I had my buy signal right there at $4.07. We got sound here. And once you're there, now it doesn't look the same for me as it looks for you because it's my channel, but there'll be a subscribe button. Click on the subscribe button, and then there's a little alarm signal as well that you should click on so that you can get alerts. Anytime I upload a new video, it will send you an email alert, so you don't have to check back over and over again. Next question, could you review ACB.TO, please, sell or hold? I don't know why you bought it, so it's hard for me to say, but I'll give you my general thought on it. So T.ACB, I definitely wouldn't buy it because the bus left the station. No reason to sell it because it hasn't given a sell signal. This stock is going parabolic. So when its stock goes up this quick, I usually go to a shorter term chart to see where there's support. So let's go to the 10-day. See how now you can see the pretty good support. So right now I'd be worried if it went back below 780. So I think if it started to move and let's say the 30-minute chart closed below 780, I'd probably take my profit on this one. It's done great. Good for you for owning it. But just use those simple principles: trend line, support, resistance, and on this one, sell it if it breaks support at the trend line. The trend line's going parabolic. You can see it was like this. It's getting steeper and steeper. So you want to be aggressive. Somewhere in the 760 to 780 is support, and you want to protect those profits at those levels. Please try to make time to look further at OWCP as you wanted to earlier. Oh yeah, thank you. OWCP. So more what I wanted to do was show you the RR lines. So we are going to look at this. So the close today was 54 cents. I can see that the low today was about 40 cents, 41. So let's draw the risk reward lines. So I go down to the bottom, go to the chart tab, and risk reward entry price 0.54, stop loss price 0.41. That's not really the stop loss, that's support. We can use a combination of that for our support. So in other words, I might go minus 2 RR rather than minus 1 RR on this one, or minus 1.3. So that's how you should draw your RR lines. Now, if you're entering at 54 cents and your risk support line is at 13 cents lower, 41, if you buy 1,000 shares, that costs you $130 in risk. It's a $540 trade for $130 worth of risk. You buy 10,000 shares, it's a $5,400 trade for $1,300 worth of risk. Now, when I say $1,300 worth of risk, it's actually going to be more because I would look for a close below 40 cents, maybe even a close below 1.3 times the risk, something like 37 cents. So you need to be comfortable with that risk, and always think about it in those terms. So I draw the lines based on the low or the last inflection point, and then just my risk for that. And that's what I wanted to talk about with that one. Thanks for the reminder. I forgot. Riot looks good to me, but I'm waiting until I'm smarter. Well, I'm glad you're waiting because it is not a good stock to buy now. I bought Riot about a week ago. So what was one of the things I talked about? Look for stocks that are starting the party, not well into the party. This stock made its break last week at $10. Went up to $24 and got beat up, annihilated today, hammered down to 16. I think the stock is going lower. So buy stocks when they are breaking from sideways trading. So here at the start of October, or whatever that was, 4 days ago, at 10 and change, but not here. You got to buy it on their day that they're breaking from low volatility, when they're first breaking through resistance. And I'm not trying to pick on you. I'm trying to emphasize these simple rules because so many people chase stocks higher because they say, oh, this stock is strong. We don't buy stocks when they have been strong. We want to buy them when they're going to be strong. And that means we're always going to be one day late, but hopefully we're ahead of the crowd. All right. Well, we've gone over an hour, so I think I'm going to wrap it up there. So here's your homework for tomorrow. Tomorrow I want you to run the action breaks and the abnormal breaks, so the two strategies we did tonight. I want you to run them before our session, and you try to pick out the winners. Write them down. That way, when I go through them with you, you will have already thought about them, and you'll get some of my thoughts as I look at those charts. All right? So that's tomorrow's homework. Have a great night. I will see you tomorrow.